Joining us now is global economics editor for the Wall Street Journal, John Hilsenrath. John, your take on this final bill. I was reading some of the analysis coming out yesterday, because that's what I do when I'm hanging out with my dog. The Joint Committee on Taxation, overall an 8% tax cut in 2019. The lower middle class households receiving the largest tax reductions on a percentage basis, upper income households receiving the most money. What do you say?
Right. Well, the upper income households are always going to receive the most money because they pay the most in taxes. There's a little bit, there's basically a little bit for everybody in the first few years of this plan. Lower middle income households, upper income households, and of course business. And then it peters out over time. I think the big question after this gets passed is what are they going to do looking ahead to 2025 when a lot of these things expire. But right now, as the stock market is saying, it's a party. Everybody gets something, business, individuals, and stocks are off to the races.
Speaking of stocks being off to the races, guess who's up and on Twitter already? President Trump. He just tweeted this. Dow rises 5,000 points on the year for the first time ever. Make America great again. We're looking at NASDAQ 7,000 potentially. John, the central question that's very difficult to answer, but I'm going to pose this to you. How much more room do stocks have to run? How much of the optimism from growth from this tax reform package is already baked in at this point?
Well, you know, that is a very difficult question to answer. The truth about markets is that optimism begets optimism. So how much farther could they run? I mean, they could keep running up very fast and for a long time because markets get a momentum to them and they keep building. You know, what you start to worry about at some point is bubbles. I don't know that we're there yet, but this could build into a bubble. And what that means is that stocks could go a lot higher before they go a lot lower.
Hey, John, it's Lindsay Bell here. I just have a question. I'm wondering what you're seeing as far as the benefit to GDP that this tax bill will implement, because that will keep the market going higher. I've seen different estimates out there. I think, you know, maybe some people are waiting for the final bill to actually come across and be signed into law. But what are you hearing?
Well, so there's a shorthand way to look at this and a longhand way to look at it. If you look at the $1.5 trillion, that works out, you know, in an economy that's producing about $19 trillion worth of goods and services a year. That works out to about 1/10 of a percentage point in growth over a 10-year period. That's not a heck of a lot. What really matters is how do businesses and individuals respond to the incentives in the plan? Do businesses say, all right, I'm going to take that, say, $1 million that I get back in taxes and invest it in a new plant and staff that new plant with more workers? In that case, growth begets growth, and you could get something a bit higher. You know, I think most of the estimates that I look at from the Federal Reserve, you just mentioned the Joint Committee on Taxation, are something less than 0.5% a year. We're having a good run in the economy right now because these taxes are coming in, the optimism about the taxes is coming in, just as the rest of the global economy is really finally shrugging off the shackles of the recession from a few years ago.
Here are a couple things that don't line up, John. I actually have some questions because I was reading. Richard Rubin, by the way, at the Wall Street Journal has done a phenomenal job at covering this.
I'll tell him that. Thank you.
No, I'm serious because I know his head hurt. His head is bound to hurt at this point.
He loves this stuff. He wakes up every morning. He can't wait to write his next tax story.
I love that because he's really knocked it out of the park. But so there's optimism in the economy. You've seen retail sales on fire, 5.8% growth year over year just for the month of November. But this tax reform isn't popular with the public. There's a new Monmouth University poll that found nearly half of Americans disapprove of the Republican tax plan. 26% say they approve. Half of them predict their taxes will go up under the plan. Just 14% say their taxes will go down. Are they saying one thing in these polls, John, and doing another? Because, again, every single income group will get a tax cut in 2019. Yeah. That's according to the Joint Committee on Taxation. So why the disconnect, do you think?
You know, it's a real puzzle, Dagan, and I was actually just thinking about this morning. You know, we quote someone in our story on that JCT report today saying, well, it's not enough money to kind of change the world for me, but I'd rather be getting it than having to give it back to the IRS. So, I think Americans have learned to be skeptical about what's going on in Washington, no matter who's in power. So you're going to get that skepticism through in these polls. But still, who wouldn't want to get money back from the IRS, or who wouldn't have to write a bigger check to the IRS? It's still something that people are going to absorb and respond positively.
Yeah, I feel like I say this over and over again. I make better decisions with my money than bureaucrats, than the IRS and the federal government. But I don't know. That's how the Republicans, quite frankly, should be selling it. Heather?
Yeah, I don't think anyone, you're right, any rational person would disagree with that, for sure. John, how much of do you think this tax reform is baked in to the stock market? I mean, there are estimates that we can go even 5 to 10% higher. Is this really needed for the stock market to go higher?
Well, I think a lot of it is baked into the stock market. I actually wouldn't be surprised if there was a little bit of a sell-off after it passed, because so much anticipation has gone into it. Mm-hmm. But as I said before, that doesn't mean that the stock market is all of a sudden going to turn lower. This market has momentum, and momentum in markets tends to build on itself. Just look at Bitcoin. People are going to see 25,000 and 6,000, and they're going to say, well, maybe it's time for me to get in. I think these markets could keep going, and at some point, I don't know when that point is, but at some point you say, all right, has it gone too far? Is this a bubble? I'm not saying it's a bubble now, but the lesson we've learned in the last 20 years is that tends to be what happens when markets really get a lot of momentum in them.
I was talking about this with Lindsay in the break, John, or before we came on air. One of the critical things in the way that this tax plan is structured is because these individual breaks, and even the breaks on pass-through entities, taking that deduction to 20%, the top rate for pass-throughs will now be, I think, 29.6%. Those tax cuts expire in 2025. So this really, the burden to make sure this works longer term is on businesses. Because if those tax cuts expire, it's the burden on politicians to extend these tax cuts for individuals, and also the burden on businesses to make sure that they are creating jobs with these tax breaks and raising wages.
Well, I'll challenge you on that, Dagan. Okay. I think businesses are going to do what they think are in their best interests. It's not written in the law that they have to hire as a result of that. Some of them are going to do share buybacks to boost their stock prices because they have to reward their investors too. Some of them are going to increase dividends. Some of them might pay back debt. Some of them will invest and hire, and we'll have to see how much of that we get.
That's really John, that was really my point, is that they're getting the permanent tax break. And if Americans want to feel good about this 10 years down the road, it's on the businesses to
well,
make that happen.
The other burden is on Congress and the next president, because as you say, this new tax law is inherently unstable. This stuff expires by 2025, and it's going to be up to somebody else to decide whether to continue it or not. So we're going to be having this debate and this discussion for years.
Oh, yeah, and we're going to be hearing about it on campaign trails for years.
Absolutely.
John, great to see you this morning. Thank you so much for getting up early for us. John Hilsenrath from the Wall Street Journal.